Tax advice for Australians moving to the UK. Thanks to the recent Free Trade Agreement, which came into force on the 31st of May 2023, there are a number of significant changes coming through that positively impact both Australians looking to live in the UK and Brits looking to move to Australia. Youth Mobility Scheme changes. The first change is that from the 31st of January 2024, the upper age limit increases from 30 years to 35 years inclusive. The second significant change is that the duration of the Youth Mobility Scheme increases from 2 years to 3 years, which represents an extension to your stay of 50%. Australian tax residency. When we supply tax advice to Australians who have moved to the UK, the first thing we need to look at is the tax residency of the individual. On the 7th of June 2023, the Australian Taxation Office, ATO, issued Final Taxation Ruling TR 2023/1, covering the tax residency tests for individuals. They also have a very useful online tool to help you determine your tax residency status. Generally speaking, if you leave Australia and intend to return within 2 years, and if you maintain connections with Australia, you will likely remain an Australian tax resident. B. If you leave Australia and don't know when you will return and you set up a permanent place of abode overseas, you will likely not be an Australian tax resident. Not all cases are cut and dried, and you need to take an holistic approach where numerous factors are considered. The tax ruling has numerous and very helpful examples. UK tax residency. Usually you become tax resident of the UK on the day that you arrive, provided you intend to stay and work in the UK for a period of time. But just like Australia, there are a number of rules and criteria that need to be met to ensure you become tax resident. The Statutory Residence Test document can guide you through this. Double taxation agreement. In the event you are a tax resident of both Australia and the UK, a mutual agreement on double taxation between the two countries exists. This ensures the same income is not taxed twice in both countries. Self-assessment tax returns in the UK. Most full-time employees will not need to complete a personal tax return in the UK. However, if you receive untaxed income, such as dividends, or operate as a sole trader, then you must file one every year. The UK personal tax year runs from the 6th of April to the 5th of April every year, and just like Australia, there are various income bands that get taxed at different rates. Whether the funds do actually get distributed like this is another question. However, for our purposes, you can just consider pay and NIC as two types of taxes you will need to pay on your income. Personal tax returns in Australia. Typically, when individuals relocate from Australia to work in the UK, the requirement to file an Australian tax return also ends. But if you are non-resident for tax purposes in Australia, you must still file a return for income earned from Australian sources, such as rental property income, bank interest, and dividends from Australian companies. Tax advice for Australians leaving the UK to return to Oz. If you are an ordinary salary or wage earner in the UK, then it's likely you have never had to complete a UK personal tax return, but you may still be due a tax refund. And if you work through your own limited company in the UK, then you can optimize your overall taxes through some useful tax planning work related to closing down your company.